In the last decade, cryptocurrency has been one of the most significant technological advancements in fintech. It all started with Bitcoin when its network was brought up in 2009. This decentralized currency has grown rapidly in the following years to what it is today. Now, Bitcoin has become synonymous with cryptocurrency, but what are all these other thousands of altcoins? Are they replacement cryptocurrencies or do they complement Bitcoin? In this video, we are going to take a deep dive into what these digital coins are and how they compare to each other. Make sure you watch to the end of the video because we are going to talk about investment strategies for cryptocurrencies. Don't forget to subscribe to Better Wealth Builder and click the notification bell so you don't miss out on future videos for your journey to financial independence. What exactly is cryptocurrency? Basically, it can be broken down into its two parts: crypto, short for cryptography, and currency, which is money. Cryptography, or cryptology, is the process of converting information into a cryptic or hidden form. This practice helps secure that information by transforming it into something that cannot be deciphered by third parties. Only the intended recipient can process and understand the information communicated. This helps in securing the transfer of the digital funds between two trusted parties. And it is currency because it is a form of money, just like other types of fiat money like the US dollar or the euro. It can be traded and it can be used to buy and sell things. But unlike the cash that you're used to using, it is only in digital form. There are no actual physical coins that you have to buy and store. The biggest difference between cryptocurrency and fiat currency is that crypto is a decentralized currency. It means that it is not backed by a government or any physical asset. Just like gold or any other investment, the value of bitcoins and altcoins are determined by the market. The more people that want to buy it, the higher the price will go. And just like gold or silver, many of these digital currencies have a finite amount. As demand goes up while the supply stays the same, the price of the different cryptocurrencies will keep increasing. The downside of crypto is that it is not backed by a government, so potentially, the value can drop to nothing if nobody wants it. But the upside of crypto is that it is not backed by a government, because governments can print money out of nothing and cause their money to lose value. As more fiat money comes into existence out of nothing, the comparative value of crypto will go up as inflation goes up. Just like precious metals, cryptocurrency is a great store of your wealth. And as a store of wealth, Bitcoin is the go-to digital coin. It is often compared to gold as a fantastic hedge against inflation. Bitcoin was just a concept in somebody's mind in the late 2000s. A white paper was released in 2008 by a person or group going by the pseudonym Satoshi Nakamoto. The Bitcoin network was launched in January of 2009, and a few days later, the first transaction was made. The decentralized nature of Bitcoin is what intrigues many people, especially those in the libertarian camp, because it is not controlled by any government but by a public distributed ledger on a peer-to-peer network. In fact, embedded in the first Bitcoin transaction was the phrase, "The Times, January 3, 2009, Chancellor on brink of second bailout for banks." This was in reference to a headline in the Times and the dangerous devaluation of fiat currency as the government contemplates another round of quantitative easing. Being on the peer-to-peer network is another positive for Bitcoin. Unlike traditional bank-to-bank transfers and wire transfers that have to go through third-party intermediaries, a Bitcoin transaction can be instantaneous and with lower fees. Bitcoin transactions are recorded in blocks. Each block is cryptographically hashed and chained to the previous block. This blockchain is verified by nodes on the Bitcoin network. These nodes are massive servers running on the Bitcoin network, and the verification process is called mining. The miners running these servers are paid a small fee for processing and verifying the transactions. One last feature that also makes Bitcoin safe is the open-source nature of its implementation. Open-source software is software whose code is open to the public. Anyone can take a copy and examine the code to see what it does or does not do. It is like crowdfunding, where many people can contribute to make it better. When the Bitcoin code was released in 2009, other digital currencies started to appear on the market. These altcoins, which refers to any cryptocurrency besides Bitcoin, share many characteristics with Bitcoin. Altcoins run on their own networks and also use the cryptographic blockchain mechanism to verify and validate transactions. Many altcoins differentiate themselves from Bitcoin with additional features like smart contracts, utility tokens, or reduced volatility like stablecoins. According to CoinMarketCap, there are more than 8,000 altcoins as of May 2021. They amount to a more than $1.2 trillion market capitalization. Meaning, the dollar amount in the market for these altcoins is more than $1.2 trillion. And this is only about 45% of the crypto market. If we include Bitcoin, the market cap is more than $2.3 trillion. The price of altcoins often mimic that of Bitcoin. As the price of Bitcoin goes up, the price of many altcoins also go up. The reverse is also true. When the price of Bitcoin goes down, the price of some altcoins also go down. This is not always the case, since some of these altcoins include other features like smart contracts as mentioned before. Some analysts say that with the development of new crypto ecosystems and market maturity, the price of altcoins will start to rise and fall independent of Bitcoin. Speaking of digital currency, the most important thing for you to do is to digitally like this video by smashing the thumbs up icon and subscribe to the channel so you can get more digital goodness. To start growing your portfolio of cryptocurrency, one strategy is to dollar cost average your purchases by buying at regular intervals and holding for the long term. When the market is up, you may buy less, but when the market is down, you are able to buy more. Over time, it averages out the cost so you don't have to worry about timing your purchases. After buying your coins, hold them for a long time. The increased value will reward you in the long run. And just like stocks, there are market fluctuations. The price of Bitcoin and different altcoins can go up or down each day, and even each hour. This leads to the riskier strategy of trading cryptocurrencies. If you can time it correctly to be able to buy low and sell high, you can make your money from the difference. But unless you spend a lot of time researching and really know what you're doing, we don't suggest active trading of cryptocurrency. Buy and hold is the safer route. As with any other investment, there is a potential to lose your principal and earnings. Diversify your crypto portfolio as a hedge. Don't put all your money into just one crypto coin. Bitcoin is a no-brainer, but do some research on a few of the other altcoins and diversify your investments with a few different cryptocurrencies. Start your research with the top altcoins like Ethereum, Cardano, and Litecoin. And just for fun, take a look at Dogecoin. Decentralized digital currency is the future. It is a convenient and safe way to store and transfer your money. Start your digital journey today. Make sure to subscribe and turn on notifications right now so you don't miss out on future videos on cryptocurrency and much more. Check out this popular video on building wealth and I'll see you there.